Hi everyone, welcome to this time's Scrolling Finance. Well, last weekend, China's bonds market went down a small stair. Yields of all terms decreased to different extents. Some yields of not that popular terms bond decreased even more, like 20 years term and 50 years term. We can see that last week the bonds market had a structural downward. So as always, let's see the overview thing of the bonds market, then check out the details part, alright? Total bond yields curve went down a small step and was more steep compared to the week before. Yields of 3, 5, 10, and 30 years terms went down 2.4, 4.2, 0.4, and 1 base point. If we compare to the one of December 9th last year, the curve was twisted and flat. Yields of 3 years term increased 1.6 base points. 5 years term decreased 8 base points. 10 and 30 years terms both went down 28 base points. The spread between Chinese treasury bonds and commercial bank perpetual bonds remained at the same level, with 5-year spread was 45 base points. About the actions of investment agencies, for the short and middle-term bonds, big banks and policy banks bought 18 billion yuan, joint stock banks and city commercial banks sold 24 billion yuan together. And for the long and ultra-long-term bonds, funds bought 18 billion yuan, whereas city and agricultural commercial banks sold 27 billion yuan together. Okay, next let's check out details part and see what happened last week. In terms of fundamentals, first economic data came out last week. Industrial added value, fixed asset investment, and the total retail sales of consumer goods were 5.8%, 3.7%, and 6.4%. Besides, real estate data went ups and downs within a 5% range compared to last month. So empirically, the total economic situation runs okay for now, with consumption performing stronger, production activity keeping stable, and the investment, especially the real estate part, recovering at a slow pace. On the outside, Iran and Israel started a war with each other, which stimulated risk-avoid emotion all over the world, including China. I have to say the theme of nowadays world has changed from peace and development to conflict and confrontation. The world's economy will definitely be influenced and take a slide, and I'm not sure about the extent. So from long and ultra-long term view, the total macro environment will be so unstable for a long time and bothers economic recovery, which encourages long and ultra-long term bonds to go down consistently. For funding conditions, the PBOC has been showing carrying attitude to bonds market for a while. From a month ago, financing price is friendly, stays at 1.5% around, under the thought of guaranteeing the economic recovery and maintaining the financial market stable. There is no reason for the PBOC to squeeze liquidity from the bonds market again. So from short and middle term view, the funding condition is loose in the near future. The risk of yield adjustment is acceptable and small. What should we pay our attention next? Well, next week is time for funding conditions to cross half-year period, so we should care about the financing price. But I guess it will be at a low position, isn't likely to hike. Then, PMI data will come out, which won't be a good-looking one, so don't put too many stakes on that. About bond investment strategies, as we foregoing analysis, the outside and inside situation of China's bonds market are both with the long side. So I think it's time to increase our bond positions, buy more short and middle-term bond to fit the loose funding condition, and buy more long and ultra-long-term bond to catch uncertainties from this chaotic world. Anyway, I will enlarge my pyramid kind of portfolio. So as always, if you want to know more useful financial information about the Chinese bond market and the economic situation, please like, share, and subscribe. I will always be here, share my understanding and experience, and waiting for you. So bye guys, until next time!